It's 5:12 a.m. You're already awake. Not because you want to be, but because Asia opened 18 minutes ago. Your phone shows 3 messages. One from Singapore. One from London. One from someone whose number isn't saved. Your inbox reads 147 unread. Your personal account balance is $38,200. Your annual salary is $320,000. But none of that matters. Because in 48 minutes, you're responsible for moving $1 billion. And the first decision of the day. I am already waiting. Most people think managing $1 billion feels like power. It doesn't. It feels like precision. You sit down in a glass office on the 27th floor. No decorations, no noise. 3 screens. Global markets. Currency flows. Position exposure. You don't check social media. You check risk. Because the number you're managing is not yours. That's the first thing you learn. And the first thing most people never understand. You don't own $1 billion. You are accountable to it. That distinction changes everything. At 24, you thought this was about money. At 30, you know it is. Money is not wealth. It is my responsibility. And responsibility scales faster than income. You didn't arrive here suddenly. Nobody does. It started with something smaller. A spreadsheet no one wanted to fix. You were 22. Entry level. Invisible. You stayed late one night and found a discrepancy. $2.3 million misallocated across 2 models. Not fraud. Just an error. You didn't announce it. You corrected it quietly. That's when it begins. Because at this level, the system doesn't reward noise. It rewards precision. One correction leads to another. One file leads to another desk. You become the person who sees what others miss. Not because you're smarter. Because you look longer. That difference compounds. 2 years later, you're no longer fixing numbers. You're presenting them. Not in the main room. The side room. But you're there. And that's enough. Because proximity changes perspective. You start to notice something. Decisions are not made based on what's correct. They're made based on what's executable. That realization stays with you. The biggest mistake in this world doesn't happen at the top. It happens here, where you start confusing accuracy with usefulness. Most people stop here. You don't. Because you adjust. You stop trying to be right. You start trying to be clear. Clear decisions move faster. Faster decisions get noticed. And noticed people get access. At 27, you're managing pieces of deals. $40 million. Then $120 million. You don't feel pressure. Not yet. Because you're still protected. There's always someone above you. Someone signing off. Someone absorbing the consequences. That layer disappears faster than you expect. One morning you're added to call. No explanation. No preparation. A client is asking about downside exposure. On a $600 million position. Everyone is quiet. You answer. Not perfectly. But clearly. That's enough. Because clarity scales. 2 months later. You're given your own book. Not large. $180 million. But it's yours. Meaning the outcome is yours. This is where it changes. You stop thinking about returns. You start thinking about survival. Because the system doesn't reward what you make. It rewards what you keep. And then, it grows. Not gradually. Suddenly. Capital flows in. A pension fund allocation. A sovereign co-investment. A rebalancing mandate. Your book crosses $1 billion. No announcement. No celebration. Just a number on a screen. And a new level of consequence. Because now, small mistakes don't stay small. A 1% error is $10 million. You feel it immediately. Not emotionally. Structurally. Your decisions slow down. Not in speed. In precision. You model everything. Base case. Downside. Extreme downside. Because at this level, You don't ask if it works. You ask if it survives. Most people think this is where freedom begins. It is. It's where constraint becomes permanent. Your time is no longer yours. Your attention is fragmented. Your decisions are layered. Every move is watched. Not publicly. Internally. You are no longer just executing. You are being evaluated. Constantly. You learn quickly. Performance is expected. Consistency is valued. And deviation is remembered. You build systems, checklists, models, frameworks, not to optimize returns, to eliminate mistakes. Because mistakes at this level are not lessons, they're exits. And then it happens. A position moves against you. Not dramatically, but enough. A currency shift. Unexpectedly. Your exposure widens. Lost $6.4 million. Contained, but visible. This is where people fail. Not because of the loss, because of the reaction. You don't react. You adjust. Hedge. Reduce. Rebalance. No emotion. Just process. Because the system doesn't care how you feel, only how you respond. If this feels familiar, you're already inside the system. You sit later that night, reviewing everything, not just the position, the structure, where the risk came from, why it existed, how it scales. Because at this level, you're not managing money. You're managing exposure. And exposure behaves differently than income ever did. It compounds in both directions. That's the part no one tells you. You adjust the position before the market opens again. Not aggressively, just enough to survive a second move. That's the difference now. You're no longer optimizing for upside. You're controlling the downside. Because at $1 billion, you don't get paid for being right once. You get paid for not being wrong repeatedly. The next few weeks are quiet. On the surface, markets stabilize. Positions recover. The loss compresses into noise. From the outside, nothing happened. Inside the system, everything did. Because now you've seen how quickly control can shift. And you don't forget that. You start restructuring. Not your portfolio. Your process. More redundancy. More verification. Less reliance on single signals. You remove fragility. That becomes your edge. Not intelligence. Stability. Most people at this stage try to grow faster. They increase risk. Chase higher returns. Expand exposure. This is where people fail. Because they confuse scale with control. You don't. You slow down. Not in execution. In selection. Fewer decisions. Better decisions. Because now every decision connects to everything else. Your portfolio is no longer a set of positions. It's a system. Currencies affect equities. Rates affect everything. Liquidity affects timing. You're not looking at assets anymore. You're looking at relationships. That's the shift. And once you see it, you can't unsee it. Your day changes. Less reaction. More anticipation. You start noticing patterns before they're visible. Capital moving quietly between sectors. Funds repositioning before announcements. Signals buried in behavior, not headlines. You don't act immediately. You wait. Because timing is no longer about speed. It's about alignment. You place a position 2 weeks later. Small. Relative to the book. $45 million. It moves exactly as expected. Not dramatically. Just enough. That's all it needs to do. Consistency compounds faster than spikes. Your confidence doesn't increase. Your clarity does. Because now you understand something most people never reach. The system isn't built to make you rich. It's built to test whether you can handle scale. And scale exposes everything. Your discipline. Your process. Your weaknesses. Nothing stays hidden here. You expand your structure again. Separate accounts. Different strategies. Defined allocations. Each with a purpose. Nothing overlaps without reason. Because overlap creates risk. And risk unmanaged becomes failure. You introduce tax efficiency. Not aggressively. Structurally. Jurisdictions. Deferral strategies. Timing of gains. You're not avoiding taxes. You're controlling when they exist. That difference matters. You consult legal teams. Not for permission. For precision. Everything is documented. Everything is intentional. Because at this level, informality becomes a liability. Your personal life compresses. Not dramatically. Quietly. Fewer conversations. Fewer distractions. Less noise. Not because you choose isolation. Because focus requires it. Most people don't see this part. They see the number. $1 billion. They assume freedom. But freedom at this level is different. It's not time. It's control. Control over decisions. Control over exposure. Control over outcomes within limits. And limits always exist. A macro shift hits 6 months later. Rates move faster than expected. Liquidity tightens. Your positions feel it immediately. Not losses. Pressure. You adjust again. Faster this time. Because you've seen this pattern before. You reduce leverage. Increase cash. Reposition defensively. Others don't. Not fast enough. That's where separation happens. Not in knowledge. In execution. Weeks pass. Markets correct. Sharply. Your portfolio dips. Then stabilizes. Then recovers. Not fully. But enough. Because survival was the objective. Always. You review performance at quarter end. Numbers are strong. Not exceptional. Consistent. That's what matters. Because consistency keeps you in the system. And being in the system is where everything compounds. You receive a call. Not scheduled. A fund is reallocating. $300 million. They want placement. Not everywhere. With you. Not because of your returns. Because of your process. That's when it becomes clear. You're no longer managing money. You're being trusted with it. And trust scales faster than capital. Your book grows again. $1.3 billion. No reaction. Just adjustment. Because the number was never the goal. The system was. And the system is working. You sit one evening in the same office. Screens dimmed. Markets closed. Everything quiet. You look at the positions. Not individually. As a whole. A machine. Inputs. Outputs. Feedback loops. Nothing random. Everything connected. And for a moment, you step back. Because this isn't what you thought it would be. At 22, you wanted money. At 30, you understand. This was never about money. It was about control. And control comes with weight. The kind you don't see. The kind you don't talk about. Because from the outside, it still looks like success. But inside the system, it's something else. Something quieter. More precise. More permanent. This isn't about getting rich. It's about understanding how the system actually works. Because once you're inside it, you don't just see the market. You become part of it. And the question changes. It's no longer, how do you make money? It's, what happens when the system you manage starts moving against you tomorrow?